This is Alan Bush with the Daily Financial Forecast for Thursday, July 5th. Stock index futures putting in a very good performance so far today, and it does appear that much of this is linked to the prospects of improving relations between the U.S. and the Eurozone in the trade area, especially in the auto sector. Also, we had economic reports coming in mixed this morning. Though the ADP report, the employment change report, a little bit on the weaker side. Some of the other numbers a little bit better. I would have to say, though, that stock index futures in the last couple of weeks seems to be overperforming the news, especially with the backdrop of the ongoing global trade tensions. So the indices, I think, performing very well for the trade situation that we have, and that, I believe, should be viewed as a sign of strength. Moving over to the currency markets, the dollar index under some pressure today, and the euro currency higher, with the euro supported by much better than expected factory orders numbers, in fact showing the first increase so far this year. Also, it does appear that interest rate differentials now may be turning against the US dollar and more favorable to the euro currency, especially in light of recent comments from ECB officials indicating that they may be withdrawing some of their accommodation later this year. Seeing the pound advancing after the Bank of England governor talking up the economy, and this precipitated an increase in probabilities that the Bank of England could raise interest rates at their August meeting. In fact, the probability of a rate hike at that meeting now is at 80%. Interest rate markets mixed. Still looks like the long-term trend is lower, although from time to time we will see some flight to quality buying coming in. In spite of the ongoing trade uncertainties, it does appear that the global economy is likely to improve, and I think at a better rate than most analysts are anticipating. So rallies, I believe, should be sold in the credit markets, especially the 30-year bonds. Also, it does appear that the probability of a rate hike at the September meeting now moving up to 80%. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.